and welcome back to Dukascopy TV. I'm Natalie MacDonald, bringing you another exclusive interview. Jean-François joins us in the studio now to discuss some of the usual suspects. Jean-François, thank you very much for coming in today.
Hi Natalie, thanks for having me back.
Okay, so we've got the dollar is responding from Bernanke's speech last week and also from Friday's NFP data. What are we seeing across the board spectrum?
Well, last week we were saying that we might be seeing some dichotomy between cable and eurodollar. Cable has made new highs and is still in quite a nice uptrend here. The eurodollar seems to be in trouble in reinstating the uptrend. So we'll quickly have a look at both and then walk through the other currencies. Now, if we look on eurodollar, well, we're still in an uptrend on all three of our frequencies on an investor's view. And the weekly is still showing us quite a lot of potential. Now, bear in mind that we are in the initial stages of an uptrend and a lot of things could happen. But the trend is still heading up, and it at the moment is confirmed with the high frequencies. Meaning if we go down to the dailies are still heading up. In terms of time, we're pretty much towards the end of the move, but there still is some potential here. We did go through quite a lot of exaggeration a few weeks back with this nice top in the risk index in the overbought and the envelopes touching each other. We saw the correction that stemmed from that during the course of the end of October, beginning of November, and now we're trying to move back up to reinstate the uptrend. It's been a difficult push up to now. Now, if we look at the hourly, and I'm going to caveat the hourly a little bit. Last week we were in the studio talking about the corrective targets, which were in the region of 136.20, and saying that if we had made it above these targets, we can then expect more potential and an impulsive move. Well, basically we made it scarcely above it, very barely above it, and that triggered the machine to show us this stronger move up here. Now, I really can't say at the moment that this breakout was very conclusive, and I would probably wait a week or so for it to be confirmed, to confirm this resume uptrend on the euro. What we could say is that at least in the risk index, we are in a period of exaggeration. And so, again, I would really need some reconfirmation here of a stronger uptrend, making it back above the 136.20 level to confirm that we are in a resume uptrend over all three frequencies. I don't do it very often, but I did want to focus on the shorter term view on the euro and on the trader's view. And as you see, the trader's view on the 60 minutes, which is different from the hourly because the hourly is 8 points a day, the 60 minutes is 1 point every hour. During the opening hours, which is 24 hours a day on the euro. And as you can see, we've pretty much reached the potential here on the 60 minutes. We are in an exaggeration on the risk index, the envelope touched each other, and so we're moving lower. We also made it through the corrective targets here on the 15 minutes, and also moving lower on the 4 minutes. So in that respect, I would caveat the hourly again, and say that we really need to make it above 136.20 again to reinitiate the uptrend. So focusing back on where we were before, back to the mosaic with the different currency pairs, we're going to look at cable now. And cable basically reinitiated an uptrend. It had been in a long-term lateral move over the last few years, and now we see potential to the upside. Now the move over the last few weeks, months, has been quite strong, and so we can see we are already almost and an exaggeration of our risk index and of our envelopes. So before we could really consider a strong uptrend here, there's probably going to be a period of consolidation. Now, to see when this period of consolidation could happen, let's look at the daily. And the daily is still heading up, and it seems like there's probably a few more months, weeks, before we can reach the targets. We are getting towards the lower end of the impulsive targets, but it's still quite a bit to go. Just watch out here, a bit of exaggeration. So still good, but you should start watching out of it the next week or so. Now, if you look at hourly, you can see that there's probably another week and a bit more potential over the short run, and then we'll have to be careful about it again. Now, just looking at the other currencies on the mosaic, dollar Swiss is pretty much the opposite from euro dollar. Now, focusing on dollar yen, it had been in consolidation over the last 6 months. It seems like we're breaking out of it. So let's have a closer look at its investor's view. So all year we had the tone that the top we had during the end of the first quarter, beginning of the second was probably an intermediate top, and that there was probably more strength to come. And you can see the weekly chart is still heading up and still has some time and a potential to go. And our targets are in the direction of 110. Now we're slowly getting into what would be the impulsive targets here on the daily. We've already moved up almost 5 figures over the last month or so. Now, is this really a risk situation? Well, you can see the envelopes are starting to touch each other, but the risk index still has a way to go to get into the red. Envelopes touching each other like this often happens when you actually move out of a consolidation zone to create a new strong move. So at the moment we would consider it still as a new move in progress, moving higher, and with the potential of the next few quarters to reach the weekly targets. On the daily, strong move on the hourly, strong move doesn't seem quite finished yet. Now back to the mosaic. And looking at the 3 assets we had been seeing moving in sync over the last few months, i.e. Australian dollar, gold, and treasury bonds, all moving lower. Basically, interest rates are coming up. It seems like it's more real interest rates than inflation. That is having a negative impact on gold because of the opportunity cost of holding gold. And incidentally, it's having an impact on Australian dollar.
Which one of these 3, were they to go on a positive uptrend, would be the impactor for the others?
Well, I would believe that the driver here is interest rates.
Okay.
And so if interest rates would start moving lower again, i.e. the bonds moving higher again, you would be probably taking away some of the negative impact on gold, on holding gold. And that would help the whole commodity space, and in particular the Australian dollar.
Okay.
But at the moment they're still heading lower. You did have a correction up that you could see on all 3 here, but that you could still see on treasury bonds. But as with the other 2, we think it's rolling over again. Now the last one is the treasury, the 3 months S&P future. It is still heading up. It is expensive, but we don't see a stop yet. Some exaggeration, so maybe a few weeks of consolidation, but we still think it's good till the second quarter next year.
Jean-François, thank you very much for coming in and sharing this material with us.
Thank you very much.
That's all we've got time for right now, but don't go away. The Dukascopy TV team will be back shortly with plenty more exclusive interviews and FX analysis for you. Goodbye for now.